All right, welcome back everyone to the weekly live stream. All right, let's get right into it. The topics, as always, are at the bottom. We have 1 minute to kind of shoot the shit, so to speak. Let everyone join in, and at the 5-minute mark, we'll get started on today's topics. As always, if you guys have any questions, feel free to ask them, and I'll try to star them all, and we'll get to them possibly towards the end. I realize I don't have a dedicated Q&A in the timestamp, but it's whenever we finish. The last one, I'll kind of add that there. Gives us some time. Some great questions already. What do I think about UMG? All right, we're going to start that one. We're going to answer that one for sure. Yeah, because Universal Music Group, there's a lot going on there with Bill Ackman. I think overall good business, decent assets, kind of a toll booth in some ways, royalty streams. So yeah, we got a couple more seconds before we begin the segment. How are we doing today? Mine is even greater question. We are doing great today. That is a tough poll question. Yes, I wanted to give a tough one. There's no wrong answer. It's opinions only. That's my opinion on it. There's no wrong answer. It's definitely debatable, either or. Okay, so I'm sure and oil, long all software. Oh, come on. We can't lie, Andrew. All right, so let's get right into the topic of today. All right, so first section, we're going to be discussing the updates to the Iran conflict, the ceasefire that may or may not be upheld. So long story short, there's been a lot of misinformation here. A lot of people posting these 10 points, these 10 points, these 15 points, what yada, yada, yada. The truth is, and this is something we were discussing in CM, it's like there's the real, I guess, discussion points. They're not fairly known. There's a lot of debate whether or not, who's included in what. We know that Israel continued its aggression against Lebanon. Lebanon, according to the United States and Israel, was not included in the ceasefire. The only sources suggesting it was included in the ceasefire is Iran. Subsequently, Pakistan, via the source of Iran, said, hey, well, they said it was included. And so it's kind of like very chaotic in terms of informational warfare. And, we are finding out, of course, was it the UAE? I don't want to misquote that. I want to make sure it's the UAE that conducted the attacks. I believe it is. I just want to double check before I make a mistake there. And it's Iran claims, by the way. I didn't see yet an official report stating as such. Okay, so I'm just going to put like a little asterisk on there that's not confirmed. But there's a lot of information going on, as always, throughout this entire conflict. And people have struggled to kind of grasp with what is true, what isn't true. One thing that I kind of want to help frame the idea or the conversation around this is like we know a couple things. We know that there is still disruption to energy supply chains, to various other supply chains within the region. The conflict has caused some damage that will take a lot of time to repair. There is, however, some bright spots, of course. There is capacity that can come online in other parts of the world that can make up for some of this. However, it doesn't make let's say, the environment tenable to bring prices to where they were just a few months ago. So it's sort of like a new reality reset. Again, another sort of like optimistic way of viewing it is if you look at the price of energy on a real basis, not just an absolute basis, it's still relatively low to where it has historically been. And this has only been getting better across time, not worse. So there's the negative way of looking at it, and there's the more optimistic way of viewing it, so to speak. So that being said, when we take that viewpoint, it's not Armageddon. It's not the end of the world. In fact, I believe that, and I'll stay by this point, the West can more than likely survive this. It's not on a relative basis ideal to where it was. And we talked about this in the last live stream. It will cost at least U.S. households. I'm not talking about European households here, but U.S. households around $2,000 per year if oil stays around the price of about $100 a barrel. So that's to give you a frame of reference, the impact it might have on discretionary expenses. And more broadly speaking, there are some optimistic conversations happening around the Federal Reserve and how they're viewing this inflationary impact. We talked about that also in the last live stream or the live stream before that. with regarding the hope that they'll look through that inflation, because there isn't really a way for interest rates to change or impact supply of energy, right? That's not, if you raise interest rates because you're seeing cost push inflation, that's not going to necessarily have the desired impact you want. You're basically saying, in order to fight cost push inflation, I'm going to destroy demand, which is more or less counterproductive. Interest rates cannot make that adjustment. I was happy to hear, again, we already addressed that, but I was happy to hear many other voices also saying that, who have much larger followings. And so it's definitely a conversation that's being had. Also, members of the Fed have also been saying as such. So that's the optimistic way, because when we talked about it here on the show, we were kind of saying it almost like as a cautionary tone. It's like, oh, what if they don't talk about it that way? What if they don't view it that way? So rest assured, we can kind of put that risk or that concern away, and they're definitely viewing it as such, because frankly, it doesn't make any sense otherwise to think that raising interest rates would fix the problem. And that, to be said, is like, depending on how severe it remains or gets, it's not that much of a problem right now. It's on a relative basis more of a problem than it was before. We were getting a lot of new economic data that's fairly positive. We're seeing the industrial sector really pick up. We're seeing a lot of capital goods purchases, meaning for the US at least. There's a lot of investment happening, broadly speaking. We know for data centers, they make a certain portion of that, but there's also a bunch of other industries. On X, I retweet all the time some of the sources that I've been following the space, especially in trucking, which, for disclosure, we're long trucking. We've been long trucking since last year. And that space has been on fire, given the real economy underneath everything has actually been starting to ramp up. And a lot of people don't know that, but everyone's distracted with the Iran conflict. And it's kind of funny that despite, all the previous narratives dying off, and we're switching to the new narrative, that's kind of like why we see the indexes have been sort of range bound for the past 6 months or so. And, coming now, all of those narratives that previously people cared about are dead. They're all dead. Now we're on this new narrative, which just happens to be a conflict, which on the surface looks worse than all the other narratives before. And so it's almost like as if this narrative were to go away, then everything looks fairly rosy from there. But underneath that, the economy has still actually been kicking strong, and we're really happy with the performance of those underlying real economy businesses. We do know, of course, like if you look at the chemical companies, LYB, Dow, etc., Westlake, all of them have done tremendously well because of this perception that there's going to be a massive supply crunch and that earnings are probably going to be a lot higher than what people expect. And we'll see that in the next couple earnings. However, I'll kind of cite the other opinion. So the sell side analysts from B of A have been kind of putting or taking the other side of that, saying the prices are now getting too optimistic for the supply crunch that is going to happen, and that generally speaking, there's still going to be an oversupply of the products, and it's only going to be a short-term benefit that doesn't justify the price appreciating as much as it has. So that's to the other side. And then the bulls are suggesting that, no, this is going to be more of a 3-year story of over-earning, so to speak. And so the price should reflect that. And so I'm neutral. We have no position, long or short, those names. So I'll say that. Well, actually, Andrew, correct me if I'm wrong in the comments or in the live chat if we're short one of them. We might actually be short one of them. So apologies for that. So just pay attention to the live chat, and then Andrew will correct me on that, because he's more in charge of the short book. So sometimes I'm not fully aware of the plethora of short positions we may be. Short chemical, anything chemical. I forget if we were or weren't. Okay, I'm starting all the questions about stocks for the Q&A section. But I'll kind of talk a little bit. I almost feel weird saying, because if it is true, I don't want to like put the idea out there too much on it. I don't know. Maybe I'm being weird about it. But so discussing on the Iran conflict, it's like a strange, it's an irrelevant paranoia. But discussing like how I think through the situation of what's happening. I don't know if it's true or not. It might not be true. But it appears to me, and it is my opinion, asterisk on opinion, that it looks like a classical example of what was offered in the Ukraine-Russia conflict, where Ukraine and Russia, were discussing brokering a ceasefire. Ukraine subsequently denied the ceasefire. for obvious reasons, because it appeared as though Russia was going to utilize it as an attempt to resupply, reorganize, take advantage, and do some reconnaissance and pitch into some targets. Because at that time, Ukraine wasn't really making deep strikes within Russia to the same capabilities that it had now. And so there was this like perception, hey, if I agreed to the ceasefire, it makes total sense, by the way. I'm not saying they should have done it. To the contrary, they did the good thing there. If I accept this, they're just going to use that and get in a better position later on. It appears to me the case that the United States is also employing still this chaos theory, which we talked about in at least the last 2 live streams, at least in one of them. I've already broached this topic to you guys that the United States, particularly President Donald Trump, he employs either chaos theory, or if you hate the guy, he's dementia retarded and you shouldn't listen to him. But in either case, he is a fairly confusing person, especially in like public discourse. So he says a lot of things, and then you have no idea what ends up happening. And there was a great interview actually by CNN. Anderson Cooper conducted it, or was it Anderson Cooper? I know Anderson Cooper interviewed the gentleman, and I believe someone else might have interviewed him the second time. But I have the transcripts, and it's kind of interesting what he had to say. So it's a professor. I also have his biography, so I'll read out his biography for a little bit. I should have had it pulled up, but I forgot I was going to bring this up almost immediately. So his name is, I'm going to mispronounce the last name. So Kian, actually, we'll just bring him up so you can read it, because trust me, I'm going to try my best, but it's tough out here. So it was an interview with this man, Kian. I'll just call him Kian. Taj Bakash. That's ECA, like I told you. Apologies. But yeah, it was an interesting interview with him. The transcript, I'll read out this part, this little snippet. Again, it was CNN of all places. And there's one that you can see video format. I couldn't find this one in video format. I don't know if it's the exact same one, but another one with Anderson Cooper. So they've interviewed him multiple times. And so he, for full context, like he was an activist against the Iranian regime, all that stuff. But he brought up a point that kind of illustrates what I was already talking about. So they can stop this war tomorrow tonight by accepting 3 points that the president has put on the table. They're actually, from an international law perspective, they're pretty reasonable and understandable demands. As you mentioned, they refused to even negotiate with that. Although I want to share one thing about the president's communication style. When I spoke to folks in Iran, who trust, he runs a very big business. He's a politician. Okay, there's a lot of jargon there. But he has to follow very closely all the tea leaves. He told me this guy's a genius, and he's talking about Trump. And I said, why? He said because he's completely confused the Iranians. Finally, the Iranians have met someone who is a match for them. Iranians are. Now, there's a lot of like fluff in there, but it illustrates like the point of the perception of what I'm discussing, which is just the employment of chaos theory. Either, and it's funny because Professor Zhang, if I can find it super quick, or if Andrew or someone in if someone in CM can send me the link right now. Of Professor Zhang, he called Trump an idiot. He said he's so stupid that he's a genius, which is kind of funny. It's kind of like this way of just refusing to give credit where credit is due, which is like this frustration that they have. They can't quite put their finger on it, why the perceived conclusion is different from the observed reality. And so it's like you think this is happening and then something else happens, and you kind of just remain in this confused state. So I guess that's like the reactionary emotional reaction, I guess, to that is like you just say, oh, he's so stupid, he's a genius, which makes no sense. He's either stupid or he's not stupid. One or the other. I don't think that's a reasonable point to have, is like he's so stupid, he's a genius. But all that to be said is like, I think you can take both sides and come to the exact same conclusion, which is you can be like this guy who says, oh, no, Trump's communication style is actually pretty intelligent because it's causing a lot of chaos, employing chaos theory. Or you can take the other side. He's completely retarded and I shouldn't listen to him. But in either case, you shouldn't listen to him, but people still listen to him. And I think that's to the advantage of the United States, because the United States definitely, at least as the apparatus is concerned, is doing something that is almost like counter to much of what the rhetoric implies. And so circling back to what this looks like with the ceasefire, there's a lot of chaos being employed. And what I'm seeing is the United States is actually increasing the amount of assets in the region. And why I invoked the example of Russia, Ukraine, is that it almost puts Iran in the similar situation to Ukraine, which is why it's like, if I'm right about this, I'm almost weird feel saying it online. Because it's like, well, hopefully they just only listen to the chaos theory and or not the chaos theory, only listen to the public discourse. Because if they do, in fact, or if they are in fact taking advantage of this moment to kind of just have the adversary a bit confused, etc., and then placing more assets in the region, then that would put them at a disadvantage in roughly 2 weeks. And that actually is close enough to the time frame that those assets would arrive in the Middle East, which is actually coincidental, I guess. That the assets leaving, I will just say somewhere in California, will arrive in the Middle East, roughly 2 week time frame. So yeah, that's the bit of one way of framing it. Really makes you think. Yeah. Left or right of the bell curve leads to the same conclusion. Yeah, it's sort of like that meme. So, great question on Dave and Affirm. Okay. No other questions, looks like. But yeah, that's the general gist. Okay. Let's see. We got 10 more minutes on this topic, I think, before we move on to the next one. Yeah, because then the next one is going to be software. All right. So if there's any questions about this stuff, happy to answer it. Okay, so the taco trade, I do view the whole taco argument as frankly a little bit regarded, but yeah. Soon, you have no idea. Well, I think you were discussing it within the context of the initial strike, if I remember correctly. Gil, I think I remember it back then. Okay, let's see if there's any other. I know you mentioned at some point. Is that yes? I'm still going to at some point when I have the time to do a dedicated video. Primetime Fabio. Well, I'm doing it Professor Jing voted on this poll. Yes, he voted on this poll. All the conflicting headlines all over YouTube thumbnails. Yes. Okay, so do you think Israel is going to provoke Iran into breaking the ceasefire? Well, it depends. I think. Well, what do you mean by that? Like more seriously, like what does that mean? Because from what I've seen, right, there has been the continued conflict with Hezbollah, and Iran struck Israel. Correct me if I'm wrong. And then also Iran struck other Gulf nations. I could be incorrect, but you let me know. So right now, what's been sort of halted is Israel attacking directly Iran. So I don't know. and there's two ways of viewing it. So either the IRGC is so decentralized at this point that the communication of the ceasefire has been, kind of hard to reach everyone, or they do genuinely view it and there's like infighting about it, whether or not the ceasefire is legitimate and should be enforced, given what was happening with Israel still attacking Hezbollah. And we see, of course, they're closing the strait again, or opening the strait. This is changing like every 5 minutes, 15 minutes. We'll consider it closed for now because it's not at the same level it was before. And there is an interesting point on that. So regarding like the overarching high level thesis on this, we do see that the prime adversary is finding this to be very problematic. So with regards to Iran, right? The prime adversary being China is pushing them to the table because they are the most impacted by all this, which again was going to the overarching thesis of the whole thing. Accidentally scroll down on the page. Okay, so we'll talk about OpenAI. Great question. We'll talk about we're going to talk about that in the software. So this question I'm going to answer soon. Iran IR out of beer, and the struggle is real. Are you saying was this a typo? Is Iran is out of beer and struggle? I don't know what it's saying. So Iran thinks the ceasefire includes Lebanon. I think Iran hit an hour before the deadline, and Israel retaliated. But I'm afraid Iran will not accept Israel leveling Lebanon. Well, leveling their asset, their proxy asset. But yes. So I think that the U.S. and Israel both do not consider Hezbollah as part of the ceasefire. And so, in this case, it's like, okay, does Iran want the ceasefire or not? Regardless, the U.S. is moving more assets into the region. So if they wait longer and they break it later, there's only going to be more, let's say, capabilities in the future. And the U.S. is also more than likely taking advantage of this and doing a lot more surveillance to see, okay, what targets could we strike next? What targets have we hit? And sort of the planning process, which shouldn't be overlooked. Also, you should observe like within the military apparatus of Iran, who has been killed and who has not been killed. I think who has not been killed is very telling. It's something we've been saying since day one about the Iran conflict, how Westerners may not appreciate the nuances within a country like Iran. So if you look at the military apparatus, there's two sections. There is the IRGC and the Artesh. And in the Artesh's case, not a single leader has been killed. That's very telling. But anyways. I'm looking at bear market. No, I have 0 in index. So it is 100% individual stocks. So 100% individual stocks or derivatives. Thoughts on 50-50 for someone looking for the market still having some stability? Well, a full equity portfolio is not considered stable. It's considered aggressive, which is actually like shows you the change in mindset of modern day investors. So just know that if you take an approach of 100% S&P 500, back in the olden days, that was considered a max risk portfolio because it's 100% equity. So consider that. If you actually want to reduce volatility or some kind, you want to either look for correlation among your stocks and think about what your exposure is to a particular theme, etc. And that's where the in theory having a long short portfolio comes in. Or if you want to just reduce volatility simply, you can just hold more cash or bonds, fixed income, and the like. Not longer term bonds because you're taking on maybe a risk you might not wanting to appreciate there. But yeah, that's simply put, like if you're saying that olden times, it would say that 50% stocks in equities, equities indexes, and then individual stocks the other 50%. That would be considered hyper aggressive because you're still 100% stocks. You're just doing, okay, this is a basket. And then this one is like ones I just pick. So it's still considered aggressive. Don't have an opinion on Novo Nordisk right now, but generally it's like it depends on where the GLP-1s competition's coming from and how much are they taking their lunch. Because Eli Lilly is shown to be a bit better at as far as like the innovations that they come out with. But I have to look at Novo Nordisk again. So it's been a while. Okay, we don't need to have this guy up. Yes, but Iran thinks... Iran thinks they are, is what JD said. Oh, yeah, I mean, they can think whatever they want, but... Details are repeated. Okay, yeah, that's a great. Okay, I'll add that to the list. All right, we're approaching the 30-minute mark, and then we'll move on to software, because software was extremely weak today, and there's a reason for it. Okay, so I really wonder why America would want to topple Iran. So it's just about the cost versus the objective, because that's been the hot debate. I think the objectives have been clear for a few years, that the U.S. is trying to focus on China and preventing a conflict with China. So there's many ways to achieve that, and that's what people are misunderstanding. It's not regime change per se. You don't need regime change to achieve that goal. You simply just need denial of resources, or reestablishment of some level of control, typically of regaining the dollar control. So China got most of its cheap energy from two countries that the United States acted upon in very quick succession: Venezuela, Iran. There were four countries named in the committee that I've been citing for a while now, back in 2024, and it was Russia, Iran, Venezuela, and Cuba. Two of those countries, you see very clearly what the impact is there. They were discussed as being engaged with either militarily or diplomatically. It would stand to reason Russia was the diplomatic one that they were talking, because they didn't say which one was which. They just said all of them. Here's the four: diplomatically or militarily. Clearly, for Venezuela, it's a mixture. It could be in Iran that it could also be looked at as a mixture in the end, but it was militarily interacted with, and then also diplomatically, if, for example, the IRGC were to survive. But in any case, it could look like Venezuela, where the regime itself stays intact. You just have this sort of shuffling around, and then the goals are still met. With Iran, the same thing could happen. It's just like more or less like, what's the quickest and dirtiest way of getting it done, because the US isn't really interested in a land grab per se, but it wants those goals achieved, and that's supported across multiple primary source documents. That's been sort of this way that the US has been viewing the chessboard, so to speak, for a while, because it's really paranoid about one particular event in the future. Okay, starting this one. Okay, we're right on the 30-minute mark. So now let's talk about software. So let's see. Let's share this time instead. Oops. There we go. Let me zoom in. Why is it black? It usually is red. There has to be a way to adjust this. There's no way the color just decided to be red. Or sorry, black. That's awful. All right. Well, I guess it's visible. It's visible enough. It's not my favorite. I preferred the other color scheme. But anyway, so ServiceNow today alone. So if we look at the one-day price, down 3%, down 97 to 47. All right, what's going on? So all of software today was relatively weak, just given the fact that we got the new release from Claude. We got a new release also for Meta. So these two models, more in particular, the one from Anthropic, was a bit more on the continued worry train for all of software. So this new model that assists people with programming, coding, etc., is still kind of continuing the same sort of fear as before, that a lot of these software firms are going to become more obsolete, not less obsolete in the future. That competition is going to ramp up, yada, yada, yada. So companies like ServiceNow, Salesforce, etc., all of them are under a lot of pressure today, even though the rest of the market was really strong. We saw relative strength pushed from the AI companies. When I say AI companies, everything that is supporting that infrastructure. So TSM had a great day. A lot of the other infrastructure names had a great day. So, some of the smaller ones, from all the way from AAOI to The ones that also participate in building data centers, also TSSI, as far as like again, these more of like smaller ancillary plays. And then the larger players as well. We already mentioned TSM, but Nvidia had a decent day. Not as good as some other companies, but nonetheless, it had a positive day, which was the other side of the coin of what we observed with software. So software continues to be just on this continuous selling pressure. The catalyst really is, well, either you got to get all the sellers to be done, easier said than done, because the sellers can be David Goggins. But let's kind of look at it from a valuation perspective. Well, ServiceNow on a GAAP basis trading, I think like 60. Well, actually, it should say right there. Yeah, 58, close enough. Down there, 58.37, and then on an adjusted basis, it's in the low 20s. It's growing its GAAP earnings above 60%, and it's growing its adjusted earnings at above 20% clip. So at a peg, if you look at it on a peg basis, it appears cheap, or it screens cheap, but nonetheless, it's still not at a crazy low valuation. A lot of people like to point, okay, this is a meta moment, which consistently gets overused, and it's annoying because meta moment is reserved for, that's a very rare event. What we really see in reality is the market being somewhat rational as far as the concerns and questions go. Now, you might disagree on it and you might be right, but I'm just going to, again, repeat the argument I think the market is making. So what arguments are the market making? So in the case of, let's take Adobe, it's more about the forward growth not being correct. So if you're trading at 20 times earnings, the belief is that maybe you're going to grow closer to 20%, maybe 15% for at least a few years. Right now, Adobe's trading at, I believe it's like 12 or 13 times GAAP earnings. Let me confirm. And this is not forward, obviously. It broke 240. Okay, 14. That's close enough. And then on an adjusted basis, I believe it's trading at 10 times earnings. So at this level, the reason why I keep pointing to Adobe, because it's heavily loved retail stock. It's priced for growth that is going to be in the low double digits. I think that's like where the market is saying this is where it's going to grow at. When it was trading above 300 and you were buying it at 20 times earnings on a GAAP basis, and even on an adjusted basis, it was around there, in the mid to high 300s. You were getting, something that was implying some elevated growth, and the market just selling it off is just saying, well, I don't think the growth is really going to be as much as you think it is. It's not trading for bankruptcy, because some people try to make that argument. I disagree with that. I think Adobe's not trading at bankruptcy levels. So we've seen companies that trade at at this perception of bankruptcy, and that's typically, you'll see it at the mid to low single digit multiple. It is trading at a price point where it's definitely not thinking there's going to be some reacceleration of growth. So that's why I've always said, like, to all the bulls out there, what you want to do in your analysis is try to make the case and figure out if there's going to be that reacceleration. If there's going to be a reacceleration, it's not priced for that, and it'll look very cheap. In the case of ServiceNow, it's still sort of trading at that level where, okay, if it keeps getting lower from here, let's say in the 80s, 70s, etc., you're getting now into a nice level below the peg of 1, where there's still a lot of growth perceived to be in the stock. And at least, like, you take sell side, if you take also what some of the folks I've spoken to focus on the software space and buy side, they're still bullish ServiceNow. They're sort of just viewing it as like, okay, well, we're not going to really buy, we're not going to be heroes, we're not going to buy this dip right now, but we're eyeing it. And the catalyst, this is kind of another question asked, is like, well, what is the catalyst? Right now, there's only negative catalysts. Well, the negative catalysts are sentiment depletion via announcements from these tech titans, OpenAI. You don't know if Google's going to come out with something, Meta, on and on and on, Microsoft. You just don't know. And so there, for now, the perception, the sentiment is just getting depleted out of this. And it's not yet at a valuation that is comparable to where you say, oh, okay, fuck this, I'm going to put 40% of the portfolio in it. It's still at this, well, I could see it trading at 15 times earnings. That's possible. I'm using adjusted. But keep in mind, on a GAAP basis, it's still trading at 58. ServiceNow is. Again, on a GAAP basis, it's growing earnings at a much more rapid clip than 50%. I think it's like 60%, because as they're getting that operating leverage, and the adjusted earnings are slowly over time going to match up with the GAAP earnings, or should say the GAAP earnings match up with the adjusted earnings. All that to be said is, like, just try to map out mentally what that might look like. And so when I say that, it is completely possible the market takes a ServiceNow to a 70. That's foreseeable. Like, so why would you rush to make this a really large position? Unless you know that there's going to be that shift in the catalyst, right? That shift in the catalyst where there's some sort of announcement regarding AI that it's like that. But for now, while I agree with all the ServiceNow bulls, I am a ServiceNow bull as well. The company itself, the product, is going to not be some loser from AI, but instead more than likely going to be some benefit or beneficiary of AI. But that doesn't change the fact that in the meantime, it's going to get lumped in with the rest of it. And so if you're wanting to buy here, well, hopefully you have a very long-term horizon and you're okay with it going to 70. So if you're putting 40% of your portfolio into something like that, good luck with that. If you can psychologically handle that, or you could just wait. You could just wait for something to happen. I guarantee you it's not going to move up 50% in a day. Now watch it do that because I said that. So it's like, oh, you didn't buy it 97, but now you get that sort of like positive shift in sentiment, and things look very different. Yeah, you're probably not going to get a 50% move when that day happens. But in the meantime, you can always just get it cheaper, and it's not like it's trading at a valuation where it's pricing in like decay, right? We're not there yet. We could get there. Who knows what happens later this year? Most of software, in fact, actually gave up most of the gains. If you actually look at on a year-to-date basis, so you can see most software had this nice little bounce off of what was extremely oversold, only to kind of just like regroup itself and then continue to sell off. There were very few software stocks that maintained the bounce. I believe I only know actually one of them was brought to my attention. This one, Samsara, which was one of the ones that managed to sort of keep the bounce so far. Now maybe it ends up losing it. But even Axon, because someone asked about Axon, and that's a software firm. It's bouncing off of yesterday's drop, which yesterday I think it dropped almost 10%, maybe a little bit higher at one point. And so this one also exhibiting that same behavior. But most software companies I know of experience a little bit of a bounce and then retrace back to the same low. Some of them are breaking below that low. I think in the case of Adobe, that's one of them. Okay. Great question. Any software question I'll answer now, by the way, in this section. Okay. Thoughts on REITs? Oh, I'll start this one for later. Oh, okay. Someone asked actually on Axon. So yeah, my thoughts on Axon. Great business, massive visibility on future revenue, indestructible by AI. So when you're talking about seat compression, which is one of the main bear thesis of what AI is going to do to a lot of software stocks. So let's say, Andrew's brought this point up a lot, where for his firm, you can use some products. Let's take Adobe or whatever production software. You can get 70, 80, 60, depending on your skill level with the prompt, % of the way there. And then Adobe carries you the rest of the way. In this example, I'll keep picking on Adobe. So there's an argument there that because of that relationship, because of the just good enough, and maybe I only need one seat versus before I had 15 seats, where everyone was collaborating. Maybe I only have I have 5 people on my team or 3 people on my team that are really good at using these tools. I'll just cut back the seats because they'll just kind of get, again, 80% of the way there, 70% of the way there. They'll pass on their work to the folks that can get the rest of the way there. It's not that we're getting rid of the product entirely, but that still is viewed as a compression. And it's not a unit basis one-to-one of that improvement in productivity versus the pricing increase capabilities of the product. So that's another thing. But regardless, we're talking about seat compression. And so across most software, we have this risk of seat compression. With Axon, you don't really have that risk. You're not going to reduce the amount of police officers. We're maybe talking about a future where there's now RoboCops, right? And then, yeah, there you have maybe some seat compression. I don't know. But that's not the reality we're talking about right now. And so within the framework of the now, Axon's not suffering that same issue. There maybe is more of a case for if they start adding some other products in and they start competing away in the emergency call centers, et cetera. But I'm not going to get into that because I'm not too familiar with if that's actually a threat or not. I'm just, if I had to think of one, maybe that's where I'd look to see if there's something there, but it's not a big deal for them. That's one of their growth vectors, but they're more of a disruptor there rather than an incumbent that's getting disrupted. So Axon, I think they're, as far as like what they're tackling, they're at the forefront of it. And it's a really attractive business to be in because you have so much visibility on the future cash flows. You're talking about 11-year contracts with the government, like local government, federal government, and then also looking at a lot of expansion in the Anglo-Saxon sphere. And then beyond that. So we'll see what happens there. But the product itself, extremely sticky, not the same risk of seat compression as some of these other software names. Okay, so let's see. Oh, thank you for the super chat, Cal. All right, so we'll talk about this one. So have you ever looked at TTWO? If not, no worries. Yes, I've looked at TTWO. So Take-Two Interactive. And they're going to have the long anticipated, right? We got everything else before we got the release of Grand Theft Auto. So Grand Theft Auto 6, so the makers of that franchise, the Red Dead Redemption franchise, all the 2K games, etc. So the main one that everyone pays attention to, because that's the heavy hitter, is of course Grand Theft Auto. And what everyone's looking out for is, well, when this game comes out, you get the initial frenzy, and it being down 21% is perhaps interesting, but you get that initial frenzy in the unit sales, and then you get the monetization after that lasts an extremely long time. So if you actually looked at Grand Theft Auto 5, the amount that they were able to monetize from that game over the years was incredible for a game. So not just the sales of the game, but everything else that came after that. And so the Rockstar Studio as a studio is a gem within the business. No one needs to hear that part. Everyone knows that. So this one's interesting because one of the reasons for the sell-off has been, again, kind of getting lumped in with the rest of software, with it being, software is going, AI is going to just make all these games, etc. I view it more so as the game itself, the studio itself is going to become a lot more efficient in producing games, and that creators or creatives are going to be a lot more empowered by the use of artificial intelligence in the various engines that they employ and develop. So I view it as like, okay, perhaps before Rockstar would take a lot longer to produce a game, maybe that shortens it a little bit, or maybe it doesn't shorten it. Maybe they're able to add more details than before, because there's two ways of viewing it. They can either take less time to do the same amount of work, or they can use the same amount of time, but then do even more with the project. So I view that whole AI risk on video games as like kind of baloney. In fact, I actually view the future of video games to be really interesting from a consumer standpoint of how LLMs are going to be implemented in games. Of course, there's probably going to be some sort of monetary cost. There's already some games out there that have mods that enable you to input an LLM. One of them that I'm aware of, right, the Mountain Blade Bannerlord game, if you guys are familiar with that game, You basically are allowed to, or the game premises, you're a warlord. You go around recruiting people and affecting the intrapolitics of the world map. And so there's a mod out there that lets you put in an LLM into the game, and then you can speak to all of the characters as a person, and it's an LLM pretending to be all the other characters. You can lie, you can manipulate, you can do all these things. It's kind of like the sky's the limit. So that's just like a first instance, and that's a mod. Can you imagine more official implementations of this in the future, where of course they say like, well, we're not going to foot the bill for you, but if there's a add-on feature that you can put in the game, and if you subscribe or you have a subscription to an LLM, you can go ahead and plug it into the game, and play it like that for some sort of ultimate experience. So that's where we're moving, and that's exciting. But from Take-Two's perspective, I think that the production time and quality is going to improve, not deteriorate. So that's something exciting. As far as the valuation goes, I wish it was cheaper, frankly. But over the course of the 5-year time period, it's pretty much gone nowhere. You have a 10% difference from then. But this one was, I think, obviously, hindsight's 2020, a really good buy, a decent buy, I'd say. It's only a double since 2022. There were plenty of stocks that outperformed it. But right now, with this sell-off, it's something to look into, because I think if you map out what GTA 6 is going to be able to produce for this company, it's going to probably move the needle quite a bit. Now, it's not, everything else cannot fail and them still be at a decent place. Like if you buy it at 37 billion, I don't think you can afford to have every other franchise within the ecosystem fail, and that GTA is just going to carry you. Although it's a very powerful franchise. But nonetheless, I think that there are other franchises are doing okay to fairly well, and the GTA franchise, which again is going to kick in full gear when it comes out. It's interesting, and usually how I've seen Take-Two Interactive trade over the years is there is like this sort of frenzy when GTA is about to release. So it's kind of funny in that way. And I wouldn't be surprised if you're looking at this name right up until release and you're seeing a lot of relative strength into that before it sort of like tapers off. It's almost like buy the rumor, sell the news. But even after that, it tends to have a little bit of strength too, because the cash flows will be real. The cash flows will be potent for the business. And so long story short, or to kind of wrap up with this, I think it's interesting with the under the context of like the sell-off that they got. But is it the best buy out there? I wouldn't argue that. I don't think you would argue that either. But it's interesting. It's interesting. My favorite play in this space, which I fumbled, but it's definitely was my favorite play in sort of like the content realm, was Games Workshop. That one's wow. I mean, it probably still is a good buy. I just pissed at myself for fumbling it. So, okay. By the way, the way I work this is I'm not strict on the time. If there's any questions on the topic, I stick to those questions, and then we stay on that topic. So you guys are basically guiding me through the timestamps. As soon as there's no more questions on the topic, we move on to the next topic. So I know that I might be over doing the SaaS sell-off and energy, but if there's questions on the topic, we stay on it, and then I just change the timestamps later. They're more like guidelines. All right, but thank you for the super chat, Cal. Much appreciated. Thoughts on ServiceNow versus CSU? So we'll talk about this. Oh, I got a DM from Andrew. Okay, so it's basically the IDF saying they've achieved most of their goals. Yep. Okay. So Could be viewed as a positive. All right, so thoughts on Now versus CSU. So I already talked about ServiceNow. On Constellation Software, now we're talking about something I think is a lot more difficult to disrupt than people give it credit for. There we go. Software, I'll do the Canadian one. So we only care about the 1-day performance, and that was up 1.53%. But anyways, I'll cut to the chase and I'll elaborate. I prefer Constellation Software over a ServiceNow at the current prices. Now let me explain why. So Constellation Software has a good and a bad. The bad, okay, people don't like that it's an acquisitive business model because in theory, this prevents a few problems. It relies a lot on their reinvestment runway. ServiceNow, so I'm not like fully one or the other, by the way, but if I had to pick one, Constellation. The argument on ServiceNow, if you're walking through this, is okay, they don't need to do the same reinvestment to grow. There's R&D on their existing products, and that's how you have to think about the expenditure on growth, on making themselves or maintaining their relevancy. Constellation, you are 1000% putting your trust in the management team to find new opportunities, buy them, and plug them in to their portfolio. The other view of it, remember how I said ServiceNow has a pretty large R&D budget? Relative to Constellation, it's almost the opposite. So once you purchase the vertical market software product or the vertical market software company, you don't really do much investment into it. And so the return on capital, the return on investment starts to look really good, especially after the years of the payback period. So, oftentimes they'll buy it like 5 times cash flows, something like that. So that means after 5 years, so companies they bought 5 years ago are turning over and getting to that break-even point. And then every dollar it generates after that is just complete, one way of looking at it is like complete profit, right? So there's that. But it relies on constantly finding new acquisitions to grow, because organic growth isn't really how it's going to manage that. There isn't going to be much. ServiceNow, it's pretty much mostly organic growth. They're figuring out, okay, what new products, what new services can we add, et cetera, et cetera. So those are two ways of starting to look at it, and why they're very different. One's horizontal software, one's vertical software. One has a massive TAM. The other one's individual companies have very small TAM. Disruptability. ServiceNow is the system of record. Constellation has a massive portfolio. Some software companies within their portfolio are systems of record in their own right. Some are not, but for the most part, follow the same theme of being mission critical. ServiceNow, arguably mission critical as well. What other things we can look at is Constellation Software has a bit of complexity. They have all of these business units. They have 2 spinoffs. They have Topicus, Lumine, that make it a bit wonky to walk through the numbers. You have free cash flow available to shareholders. Then you have to do the adjustment for the liability of the purchase they're going to do on Topicus in the future. And so there's a little bit of wonkiness there. Conversely, ServiceNow also has other bits that make it complicated. I'm almost like not making a case for either, by the way. But I promise I am. It's like, these are all negative things. But yeah, Constellation has that quirkiness to it. Then ServiceNow has the other classical American software firm quirkiness to it, where they have a lot of stock-based comp. They have adjusted earnings that they want you to look at, and invoking Charlie Munger, the bullshit earnings conversation. But there's that with ServiceNow. So, but with ServiceNow, at least, you got GAAP, standard GAAP, simple, that you can kind of just throw everything else out and focus on that. And then with Constellation Software, you can't use GAAP because, well, it's not an American company, it's Canadian. And you have to maybe look at thankfully they help you out with at least the free cash flow available to shareholders adjustment. Remember that you just have to do that other adjustment that they don't do. So valuation-wise, Constellation's cheaper. But Constellation, again, if you're doing it on organic earnings, organic growth, which is preferable always to acquisition growth, then that gives another point or edge to ServiceNow. So why do I view Constellation a little bit more favorably than ServiceNow? Well, I think the valuation right now for Constellation, and given its track record, I think I'm comfortable with saying the price right now makes a lot more sense. And I think I can trust management to kind of continue the same business as usual and finding these tuck-in acquisitions to build the portfolio even more. And I think the environment we're entering is going to be more favorable to them. So we see a lot of private equity perhaps being a little bit more fearful of adding software to their portfolio. Where am I coming up with that? Well, if you guys haven't been living under a rock and you looked outside at the news, you probably noticed that private equity is under scrutiny right now. And in particular, private equity pertaining to software is under scrutiny. A lot of the private equity firms are being sort of defensive about the description of their portfolios, the makeup of their portfolios. They're saying, oh, no, my software exposure is only 10% or 11%, 12%. So with that, it's kind of giving you the hint that does a private equity fund or firm have a lot of appetite in aggregate to go out there and buy software? Stands to reason, probably not. Stands to reason. Could be wrong, but probably not, just given how defensive they're being about it. So that could be viewed as a reduction in the competition for those deals, which means Constellation might be getting a better deal in the future than they have been in the past several years, which could mean that the return on investment is going to improve over the next couple of years. But it will take time because, if you guys don't know this, private markets move slower than public markets. So that's one of the benefits and drawbacks. We know about this with private equity. A lot of times the same criticisms people levy against them is also the reality of the other side of the equation, the buyer, in the case Constellation Software, which is bidding out these private companies and saying, oh, I'll pay you this much for your company. And the guy goes, no, I think it's worth more because it was worth that much a year ago. And so a lot of times it's sometimes a little bit slower to adjust to the new reality. Public markets, fairly instant. So now, summarizing to answer your final question, thoughts on Now and CSU. I prefer CSU, slightly takes the edge. I think ServiceNow, for a quality business, extremely high quality. I don't think it's going to be disrupted. I made the case. I spent a good chunk of this section talking about why ServiceNow might not be the cheapest stock out there, but nonetheless, I'm not going to debate its quality. If it's not at the price where I'm like, oh, everything else just doesn't make sense compared to this, and I should just only be buying ServiceNow. That's not the argument, but it's just great company, decent price. If you buy it here, don't be surprised if it goes lower, because it's frankly, it's just not like the cheapest company I've ever seen in my life. It's kind of just down the middle. It was at a crackhead multiple, and now it's just corrected to something much more normal. And hey, I really don't see a lot of excitement from the management team to trip over themselves to buy the stock right now. So there's that. But yeah, in the case of Constellation Software, there's also that I guess benefit you have there. He says some now seems overvalued. Why are so many people bullish here? Well, because the price went down, right? And at least I prefer people who get excited by the price going down than price go up. I only buy stock that go up. So I'll give some credit there. It's like the nice contrarian mindset. Of course, there's like some nuance that we should apply to being contrarian. And it's that, well, the market can get things right, and the market could have just been wrong at this price, and it might be more appropriate at this price. Okay. Oh, this is a comment from earlier. You are correct. Hezbollah and Lebanon are not of the Islamic regime's business, and Israel, U.S. never agreed to that. Israel, U.S. honored ceasefire. Islamic regime violated it. Plain and simple. Yeah. Thoughts on AI efficiency, cybersecurity, SaaS, Palo Alto, CrowdStrike, Rubrik. So Palo Alto, CrowdStrike. Okay, so all of cybersecurity, besides basically Fortinet, absolutely just freaking hate their shareholders. That's more of a joke than reality, but it feels that way sometimes. So I think generally the theme of cybersecurity probably going to still be very important. I think the potential annihilation. I don't even know what Fortinet's at these guys. Invoke Fortinet. Okay, it's at 83, so it's been pretty stable. I imagine CrowdStrike, 426. So fairly stable today, bit stronger than the rest of SaaS, but gave up most of its gains. So I think if you get a lot of some sort of concern or sell off, I know that Anthropic's marketing team is like saying, "Oh yeah, if we release this fully, it's really bad for, cybersecurity, yada yada yada." It's marketing, but nonetheless, I'd say the themes are great. Valuations, I just, it's tough for me. In that plan, it mentioned the ceasefire at Lebanon, right? Thought it said on. No. So there's a lot of fake news about the plan, and I don't really fault Financial Times necessarily, even though I love dogging on journalists. It's really difficult in this case to actually keep track of it. The source where it came from saying it was Lebanon was just Iran, basically. Yeah, and the source of Pakistan is Iran in this case. Pakistan did say it. You are correct, but their source is Iran. There's a forward visibility for Axon implying enough growth to justify the current multiple. Yeah, so the current multiple also takes into account the way they're recording a lot of their stock-based comp, which a lot of it is upfront. So they recorded a lot of the stock-based comp for the. I'm not saying no to your answer to your question, by the way. Axon's very expensive. It's not as expensive as it might appear, but it's very expensive still, even when you do the adjustments. But there's some gimmickiness to the way the way stock-based comp is being recorded there. They're basically recognizing 5 years worth of stock-based comp for at least CEO, for example, all in once. That's how you got the he's like the highest paid CEO. Nonetheless, yes, and okay, there is a general theory, like if you're trading at 20 times earnings and you have a perpetual growth rate of like 5%, in theory you're actually undervalued. If you're perpetual, that's why when you're doing like a DCF or anything like that and you're doing the perpetual method, you have to be very careful about what your perpetual growth rate is, because I can make anything work if I throw in like a 5%. Not anything, but I can make a lot of things work that you might be surprised at by throwing a 5% perpetual growth, or something like if you throw a 10%, watch what happens when you throw 10%. Everything's a buy. So yes, visibility is rewarded a lot with the higher multiple. That part I can tell you. Yeah. Okay, bullish AI, TK Sports. Check Discord DMs for advanced Discord summary proposal summarizing. Yes, I need to get to your comment. All right, I'll try to get to you today. 3. What are the other SaaS puzzling sold off because of AI fears? Would Netflix be one? Netflix didn't really sell off. I mean, Netflix didn't sell off at all. Netflix is on the recovery. The reason why Netflix sold off is the Warner Bros. Discovery merger. So I think they're holding really strong. Yeah. So Netflix, I mean, your catalysts there is improvement monetization in the ads business. And yeah, I mean, the price increases, they'll keep coming here and there. But the ads business per se is one of the more interesting growth vectors for them. How they are able to monetize and get those users up and running to something more comparable to some of their competitors, which they've been citing for a few earnings calls now, that's like their area for improvement. But yeah, Netflix, I don't think they're getting hit with the AI fears. Hey, no worries, man. Anytime. Warmongers Israelis can never tolerate peace with Iran. She is far better than the service now. Yeah, I agree. I really hope Iranian people will be free from that regime. Oh, okay. You guys are going at it with each other. I love it. I love the conversation. All right, what for is coming tonight? Quick question, Fabio. Private companies are slower, also upside or generally the downside of their valuation of the company. No, funny enough, like the upside you're talking about the valuation on the upside. No, like someone could come to you tomorrow and offer you more. Depends on what someone private is willing to offer you. It's all about liquidity, though. But the owners who might be willing to sell, that's like where the adjustment might be slow. The owner would love to take a higher price. If you want to pay them more than what they think, they have a number in their head. If you want to pay them more than that, you can get the deal done pretty quickly. If you go under that number too much, a lot of movement, a lot of time before that adjusts. I'll answer this Croc question and the Q&A. Software CRM versus Zscaler. Bro, well, I mean, cybersecurity versus CRM powerhouse with a bunch of other things. Probably Zscaler from the quality, Salesforce from the valuation. Salesforce probably a bit more disruptible from AI from the seat compression thing that we talked about. So that's the big concern with Salesforce. Seat compressions is going to be the big question mark, whether or not they're able to transition fully to a usage-based model from a seats-based model. So yeah, that could be problematic. Oh, okay. Some great questions. I love the questions. I love the conversations you guys are bringing up, and I see that there's differing opinions here that'll come up. Okay, can you talk a little bit more about Iran war? Okay, so we're going away from the software. We're coming back, and that's perfectly fine, by the way. Always for all the viewers listening, timestamps, we're allowed to go back. We're not allowed to go forward with questions. So if you ask a question about a topic I'm going to talk about in the future and I jump over it, I'm not ignoring you. I'm just going to talk about it when we get there. But if you ask a question about a prior topic, we can always go backwards. We just can't go forward until we get there. Okay, so can you talk a bit more about the Iran war fits in with the resource and now strategy of China? Did the U.S. already achieve what they need to? Yeah, of course. So high level, kind of coming out of it a little bit. Iran, as far as a resource of energy for China, is I think was approximately 20%. Additional to that, Iran was selling discounted petroleum to China because of the whole sanctions thing, and of course, China negotiating cleverly outside of the dollar system because Iran didn't have access to it. So denial of resources fits in where the United States is attempting to make it so that any sort of conflict is like untenable, because China has one big weakness, which is its dependency on resources. There's a great question that I was able to actually bring up in conversation with some of the folks who have a lot more, I'll just say, a lot more experience as far as military matters go. And it's a great question I had myself, but okay, why do this? Why not in the conflict with China bring up where, okay, the United States can just block energy by threatening all the transport ships coming out? Well, I already had a guess as to what the answer might be, and I'll repeat what my answer was, which was the United States would be a bit more distracted, very likely, elsewhere, and it's almost assuming that China is not going to have also that in mind and have military naval assets all over the place. It's, in particular, actually, a story recently broke out. It's not that it's pretty old, like a year or so old, I think, on the earlier sources, but it's gotten more attention recently, which is good because it is a bit of a concern. But China has also been mapping out the sea floor, all the way to Hawaii, which is like, what? And so thankfully, some of the more prominent, larger YouTube channels, I think one of who's an investigative reporter, I think China Uncensored, he brought it up recently, which I'm happy to see, because it is something that, like, hey, everyone, you should look at this. This is actually kind of concerning. But why would they do this? But they've been mapping out the ocean floor all the way past India, all the way to the Straits, and all the way to Hawaii. What's the reason for that? Well, a lot of it is for submarine mapping. And so because that can pose a threat and help defend choke points, is like submarine supremacy, which is like more so a longer term goal, because keep in mind the 2027 figure is for minimal readiness, and they were really approaching beyond that. They had stated goals on improvements in their naval capacity, etc. So longer term, this was like a necessity to at least get the groundwork so that they could navigate the ocean floor with their fleets. Okay, so why would it not be tenable as a strategy? Well, for that simple reason, like, because as a normie, I would say almost the same thing. I'd be like, why not? Like, duh. And it's like, well, because it's more complicated than that. It would be something that is contested. It would be something that also we would be having to defend our own shipping lanes. Like, everyone would be, it'd be chaos, in other words. And so it's better to bite it early and all at once, where you're getting it right at the source, in theory, rather than waiting for that event to occur. And then again, comes back to the concern of, well, Iran would have been at full capacity or full strength. And then what would the presented threat be then amidst the chaos, which is like how the US was viewing it, or has been viewing it. So did they already achieve it? Not really. That's not visible right now. It really depends, but it can have achieved it if it shows to be the case that the Iranian energy export capacity is much more diminished, or becomes much more of some sort of like compliancy to U.S. Demands. Similar to what we saw with Venezuela. So you could see, some sort of concessions on the other front, which is like how I described it. It's kind of like a side quest, making sure they don't get nuclear weapons, but it's a very important one. So it's like when you're playing to invoke the example of a video game, forgive me for it. It's like one of those side quests that's very developed, has a nice story, and you really want to focus on it and you really want to get it done. But it's not the main story or the main mission. And so in this case, it's kind of like that, where yes, the US really does want to achieve that, but it's not like the main thing. But it doesn't mean that it will not put a lot of resources in achieving that goal. So Iran not wanting to get nuclear weapons in the future would be viewed as, sort of the positive. They already used their nuclear option once, which was the Strait of Hormuz. In the next decade or so, I'm willing to bet with anyone that the Gulf nations are going to plan around that. And this is only something that can be invoked once. That's why it was always a threat that you could use, but only once. And whether the US achieves the full resource denial is yet to be seen. Is really yet to be seen. So too early to say it on that, but I can say from at least the other measures we've seen, from at least what we saw in Venezuela, Mexico, Panama, right now actually with Peru, Chile, these other nations kind of also falling in very recently, actually, with the other Latin American nations. It's all directed towards China. It's fairly obvious there. Okay. So China and Russia are the biggest winners in this Iran war. I respectfully disagree with that. I think they were definitely losers. I'm willing to have a back and forth with you on that. But definitely I'll explain why. I know that some people have said they're the winners, especially The Economist has said China was one of the winners. But in reality, this has been probably the most crippling to the Chinese economy. And in the Russian sense, like Russia lost 40% of their distributive capacity. Russia shared intelligence with the Iranians, and the U.S. shared intelligence with the Ukrainians. The Russians proposed to the Americans to please stop distributing intelligence to the Ukrainians, and they would stop distributing intelligence to the Iranians. The Iranians managed to strike down or destroy a few assets, of which the U.S. and if you do the math on the percent total budget of the U.S. military, it's frankly nothing. And in return, the Ukrainians struck out 40% of their total capacity, which equates to roughly 15+% of their annual revenues. So not really a fair tit for tat there. And then for the Chinese, they are probably one of the most impacted, especially just compared to the United States, from this standpoint. And the conflict that we are sort of seeing right now unfold also showed that their tech isn't really up to snuff. It also showed a lot of the countries that allied themselves with them and accepted their technology, again, from other examples as well, with Pakistan, India, etc., that their technology really isn't at the same level as the United States. So it again weakens their position as far as like credibility goes. So I view it in a total sense, it's not a benefit for them. But interested to hear your other thoughts on that. I don't think it's that big of a deal. We talked about it last week. That's the brief summary. Just trying to catch up with everything. Enjoy your stock analysis. Thank you. Simply too much for the warmongering and genocidal state of the Fair enough. Fair enough. But yeah. So I like that. You're separating the two. But I don't think. Well, my only pushback is I'm not simping for them. I'm trying to apply a level of criticism because I think people go way too far and fall for third world propaganda on it a little bit too much. In fact, well, I guess I'll invoke this now, but in the informational warfare section that I did last week, just briefly talking about it, there's a lot more. I could spend like 3 or 4 hours just on that topic. But let me actually see here. I have to get the quote, but it's kind of interesting how things have changed over time. I don't know if I should bring this up right now, but it's a quote from Khomeini back from 1982. Just kind of illustrating, and I was talking about this with Andrew because people have such short mental time spans because I think we live too short lives. Like humans don't live very long. So 10 years ago is a long time, and people will quote things from 10 years ago, but they will not really quote things from 30, 40 years ago. It was a long time ago. But there was a break at one point where the whole dynamic of claim being the Israel's a puppet of the US sort of changed because in the informational warfare campaign, it was not that effective. So it switched roughly about a little over 20 years ago. Because the other one was more effective. We got social media implementation, and then you got really immediate feedback on success rate of different informational campaigns. And one was much more impactful. But yeah, even like, going back, it was funny that in the interview from 1982, he cited that the only country, Israel was mentioned in the interview. He said they could be friends with Israel, and they could be friends with the Soviets, Israelis, Arab nations, and the greatest enemy of them was the United States. And now it's really funny to say, oh yeah, United States is a puppet of Israel, all of these things, because it's more successful. It works more. So in classical fashion of informational warfare campaign, you just go with the one that is lands the most hits, and this one lands really well. So there's that. If you make 20% risk free, here, how much would you invest in fixed income instrument? If it's 20% per year risk free, I probably would say, unless everything else is offering me an insanely higher amount, I probably wouldn't be investing in anything else. Easy. All right, start this and thoughts on SPI. Brotherhood quest of Elder Scrolls game. Yeah, hell yeah. Okay, that's exactly what I was trying to invoke. Or get bombed once more since 1945. Okay. Thoughts on Carrier. Okay, start that. If you live too long, you carry old grudges, and war never ends. Unlimited lifespan is a natural adaptation to make peace. One way of seeing it, I guess. But yeah, it's not that long ago, by the way. I made it sound like it's like 200 years ago. It's in the 1980s. It's the same guy. He only just died. So and by the way, that's 1980s that you go back to what I said, but you can go back less than that. I believe, again, like the main switch in the propaganda campaigns happened like I think during the end of the Bush era. I believe it was like during the end of the Bush era is when I think most of the switch happened. Okay, software question. Paycom versus Paylocity, which holds better value? I'd honestly say Paycom. Those are actually two very different strategies. So Paycom is more, they'll build their own data centers, control their costs. So long term, Paycom probably has a better cost control in place. Paylocity went for the cloud or third-party cloud, which has another benefit, at least the very rapid ramp-up capabilities. Paycom is going to be much more capital intensive, so a lot more capex involved to actually build the infrastructure. So there's benefits and drawbacks. Paylocity probably going to be more flexible for different enterprises to adopt. Paycom's gone all in on Betty, which is more trying to move, in my view, it's just like up market. So they're trying to take share from the ADPs and the like that are much more up market, or Workday. Yeah, I'd probably go with Paycom slightly. Yeah. Okay, so Fabio, Microsoft dead? Yes, Microsoft is dead. The thing with Israel-U.S. relations, I don't understand how much outward support at all costs. Seems U.S. politicians speak on Israel that nearly spread that idea on its own. Why do we back them? Oh, are you asking why do we back? Okay, so let me read it again. The thing with Israel-U.S. relations, I don't understand, is how much outward support at all cost. It seems U.S. politicians speak on it. No, genuinely, because they're, as far as like a sphere of influence, they're very useful for the United States to have influence in the Middle East, which the Middle East is extremely important place in the modern era, simply for energy. So the global superpower obviously will have something to say about the flow of spice, so to speak, from Arrakis. And in that in that same token, it makes sense that any ally within the region that is willing to assist militarily in that way is very useful to the United States. I am not saying that Israel has no influence in the United States. In fact, I would argue, to a similar token, the Arabs have a lot of influence in the United States, just given how much each one donates. And that's a whole separate question. I'm not going to get into the politics of it. You could definitely make the case to me, and I wouldn't really disagree with you, that maybe there shouldn't be that sort of investment. But nonetheless, I think a fair criticism to be had is like a fair analysis on the situation is that for the U.S., it's much more, I think, they are very useful to the United States. If another nation presented even more use to the United States, I think the United States would appreciate that. But Israel also has an incentive to be useful to the United States because it is surrounded by adversarial nations. So it's kind of like a consequence of the environment. You know, it's kind of like I would expect nothing less. Israel would, of course, almost have to look outward for support because it is surrounded by adversaries that are more hostile than not. And then the United States has a goal. It wishes to seek to have a ready capacity to influence the area. And this one's willing to receive and reciprocate in that way. But they don't always align. That's also like a misconception. There's been misalignments before. But people don't want to remember those. They want to only focus on the times that they work together. But anyways. So you love the Dune references. I try to do them as much as possible. I'm a big Dune fan. I don't view Israel's controlling the U.S. like a puppet master. It's more that Israel is a pawn. Yeah. And by the way, just so we get back to it. Why do we back Israel so much in general? Well, I hope I just answered that, fake AOS, but to get back to it on this point, for the longest time, the narrative, the propaganda was saying that this was saying this, like Iranian propaganda was saying this. I believe at some point it was actually the Chinese who, with the work or helping with the Iranians here, switched the narrative because it was much more impactful. So if you're trying to look at what is effective and what's not effective, this was the narrative forever. Like it switched, I believe it was like 20 something years ago. Again, I could be imprecise on the exact date, but like I said, like in 1982, it's going to take me too long to read because I have to read the subtitles here in the interview. Okay. Of countries expected. Yeah. So of all the countries you mentioned, which ones do you expect to become friends with? The interviewer is asking him, and his response is all of those countries except for one. And then he said, well, what is that one country? And then he said the United States. That was back in 1982. So, yeah, the guy just died. I mean, he died on the first day of the conflict. Okay. Let's see. Yeah, so U.S. like a puppet master. It's more of the Israel is a U.S. pawn in the Middle East. Yeah, and pawn is like maybe also too strong to add some nuance. Like there's clearly moments where they kind of just say, fuck it. I think like the U.S. for like as far as an imperial master is much nicer than other imperial masters would have probably been in the past. We follow checks and balances. Okay, so what are your thoughts on Unity software? Yeah. I view it not negatively. App Levin's been kicking their ass in the ad tech space, so that's a problem. Which could mean increasing productivity in the AI market is pricing in total upside. Yeah, so from the creativity engine, I don't see it as negative actually. Like I said with Take-Two Interactive, I think it's going to actually improve their product a lot more. But yeah, no, there's a lot of things I like about Unity. I think for the price, it's decent. Okay, so what are your thoughts? I already answered this one. Also bring religion muddies, or it feels like that history hides some agenda that we don't have awareness, but that can't be affirmed. Well, yeah, theological disagreements between various groups is very problematic. Will the IRGC be toppled? What's your opinion? Yeah, it's just opinion. I wonder if America will support them with weapons based or not. Well, the Artesh has not been touched at all. If you actually look at the org charts of who I'm certain the IRGC are paranoid as hell about this. I don't know if this is true or not because there's so much bullshit information. There was one report suggesting that the IRGC disarmed the Artesh recently. That could be true. That could not be true. There's rumors that the United States is arming the Artesh. But yeah, all the Iranians I spoke to on this subject matter, all of them mentioned the Artesh as being the one wild card in the Iranian regime that's like could easily flip. But they're only going to flip when it's certain, because the way the Artesh thinks about, I think logically, if you think about it this way, you're in their position. You really only have one shot to make it. If you shoot for the king, you cannot miss, sort of thing. So if you're the Artesh, you're not going to move until almost like the very last minute where you're certain the regime is toppling. Then you're going to move, because if you move and you lose, there's no more existence for you. There's nothing after you. So they know they only have one shot. But if the reports are true that they disarmed them, I don't know. Who knows? So will the IRGC be toppled? I don't know, because it could also be the case that the IRGC eventually the leadership's like, you know what? I want to live. I want to have a good life, so to speak. Fuck it. We don't need nuclear weapons. I can just be in control of the borders of Iran, and I don't need to mess with outside. That was the old guard. I'm the new guys. That could also be the case. You never know. So we'll see. Everyone talking predictions here is talking maybe a little bit too early. I think I'm pretty confident on what the U.S. wants. And then so within that framework, again, and observing all the other things U.S. has done, I see that that's like literally what they're pushing for. And we'll see if how they can achieve it here. That doesn't necessarily have to look like a regime change, so to speak. The IRGC could totally still be in charge, and the U.S. could achieve what it wants out of that. Okay, so we got through all of those questions. Whew. All right. So AI investment is back. We'll be very quick here, or very brief here. Let me go ahead and edit the timestamp to make sure. Okay, so no secret, right? Today, Taiwan Semi, all of the AI stocks, pretty strong overall. AI investment for sure is back. Again, we're going to keep it short and sweet. For sure is back. I think that's actually what the market needs to carry it forward. We need continued strength there. We see really strong performance in memory. Disclosure, we're long memory. We're long TSM as well. So we need to see continued strength. We're seeing SanDisk at $800 here. We're seeing SK Hynix, really strong performance today. Going to have an uplisting here in the United States soon, so we're excited for that. And yeah, TSM as well. We're probably going to see it break 400 at some point in the near, not too distant future. We'll have to see. There's a lot of concerns, right? Okay, helium, what all that does. TSM's diversifying their supply chains. They're going to be fine. Honestly, with TSM and all of semiconductors and all of the AI investment, the only one concern is what's going to happen with Taiwan, which I think, as I made the case, in my view, that probability is going down, not up. So we'll have to see. The only stinking suspicion I have is that there will be some event with the islands off the coast of China that belong to Taiwan. So technically, China might take that, and that could be a symbolic move that satisfies the CCP and doesn't escalate things any further. Those islands are heavily dependent on the Chinese economy anyways, versus the mainland of Taiwan. And that might be a concession the Taiwanese are willing to make, and the US is willing to make, in order for the CCP to say, all right, symbolically, I did something. Xi Jinping did something. Because what I'm viewing with the conflict in Iran, I'm viewing the US's steps to corner away the energy market from China. I don't see logically them as doing the attack. I will cite one thing, because this is something I try to stress a lot. It's something you can appreciate for if you're trying to analyze any situation, how much of a wild card autocrats can be, because I feel like it's not appreciated enough. So because people, again, short memories, we forget things, and it's fine. There's so much information, so many things to remember. It's fine to not remember, but you do hopefully you start remembering some of these things. But here, I'll get a quote. Oh my gosh, it's hard for me to find this immediately. I have it here. Okay. In late 2021 and early 2022, numerous policy analysts and commentators wrote Russia was unlikely to launch a major invasion, often reasoning that Moscow was already extracting concessions and leverage through troop buildups and coercion. So war would be too costly and counterproductive. What I'm trying to illustrate with that quote there, back in before the invasion of Ukraine, the big one, because obviously you could argue Crimea, a lot of folks, very intelligent folks, were outside of the general defense, military, intelligence apparatus, were making all the wonderful arguments and claims about why it makes no sense for Russia to invade Ukraine, because it didn't back then. That it was a controversial opinion to say it makes sense, right? Oh, they're going to do it. Or not even that it makes sense. Some people who would say, the very few, that was more the intelligence folks, they're going to do it even though it doesn't make sense. That's the position. And by the way, just to be a little ominous and scary for a little bit, that is the exact same position we find ourselves today with the CCP and Taiwan. We could sit here and list like a billion reasons why it makes no sense for them to do it. It makes more sense for them to just do the status quo, think through things through peaceful terms, focus on growing the economy, focus on commerce, focus on trade. Wonderful arguments, all of them. We're all forgetting that we're talking about autocrats. So with Russia, wonderful arguments all around. Makes no sense. Putin would never do such a stupid thing. Totally makes total sense. I'm not sitting here and saying those people are dumb for saying that, even though we have the advantage of hindsight. Hindsight's 2020. What those people fail to remember is that, and this is an old saying, as old as time, autocrats can be fairly unpredictable. in their actions, because oftentimes this is one of the characteristics, fortunately and unfortunately, so it's a double-edged sword of being an autocrat, is the information you might have actually might not be very good. So in the case like of Vladimir Putin, he might have thought his military was much more powerful than it really was. And when the invasion begins, he finds that his organization is littered with corruption. All weapons that should have been maintained were never maintained. All these military defense contractors, they were embezzling the money. Wow, who would have known? So, arguably, Putin probably thought the Russian military capabilities were much more than what they actually were. And so he was operating off of false or incorrect information. Because one of the symptoms of being or consequences of being an autocrat is that people will lie to you because they're afraid of you. So if you're yeah, we got that. If you're unable to kind of come to that understanding, you're always going to be confused with what an autocrat does. An autocrat can do something that is completely illogical and against like what we would stand to reason as something a normal person would do. So all that to be said, to summarize, and how it relates to China is obviously we can make the odds impossible for them from a logical perspective. We can make all the rational arguments in the world. That's why I say it's still not zero. I think the official intelligence community briefing of this year said 2027, they're not going to do it. And that's pretty recent, right? So we knew that they wanted to be ready by 2027. So they're already saying 2027 probably not going to happen. We'll take it at that word, because when the U.S. intelligence community did say Russia was going to invade Ukraine, they did so at a pretty fascinating and accurate, timetable. I think that we just have to keep that in mind. But if it doesn't happen, I agree with the statement, Taiwan to the moon. And that is where I was bringing that up. That all that rant was to eventually lead us to this comment, which thank you again for the super chat. TSM to the moon. Absolutely. If there is no invasion of Taiwan, data centers, TSM, all of it to the moon. And it's just going to follow the normal business cycle of capital investments in data centers and semiconductors, which we can work with that. The black swan event is horrendous. And frankly, that would be a real solve. Everything you guys saw right now is like nothing. Absolutely nothing. This would be a big sell-off. Okay, as a deviation of thinking, yes, and that's another aspect. So some argue in retrospect, Putin did what he did to consolidate power. One way for an autocrat to secure authority is to create an outside threat, to create this exterior adversary, switch the entire economy to a wartime economy. Again, historians debate on like how much of that is like historians and economists debate on like how much of that is patchwork versus somehow intelligent strategic thinking, because I would stand, my opinion is that conflict, war is just destructive. Broken window fallacy is a real thing. Like it's a fallacy. We're building things to destroy them. It's not conductive. So I'm not a believer in the wartime economy being something magical. I think it's something that it only lasts for so long. But yeah, do you think Putin succeeded in power consolidation? It's tough to know. It's tough to know because the information we get out of Moscow or out of Russia, I don't think is complete. And the picture we get from outside looking in is incomplete. I would say I wouldn't be the one to know that. Maybe members of the U.S. government might be more familiar with that. Just from the outsider looking in, so all that to put an asterisk on what I'm about to say, outsider looking in, it appears it worked in some cases, but didn't work in other cases. So I'll illustrate. The conflict itself, I don't think he was planning on it being so bad, to say the least, because that's the problem. I think in theory it worked up to a point and then had diminishing returns and might be flipping to a negative, because the a lot of the casualty figures that we're seeing, even on the lower end estimates, are still vastly, like, the US is like talking about a few casualties. The Russians are wiping out of their own men large swaths of their population, and still nothing compared to World War II, by the way. You should actually, this is always like a shock factor, a shock value. If you go back and look at the numbers of World War II, you calculate what are the percent of men, and then what are the percent of young men, and then you'll be horrified by how many went and participated in conflict and how many died. And then you look at the calculation now, and it's like, it looks really bad, especially like comparing it to the United States, for both, by the way, Ukraine and Russia. It's horrific for both. We don't know exactly the figures for Ukraine, but yada, yada. It's really bad for both sides. But just speaking on Russia, because it was Russia's choice to engage in this, Ukraine has no choice but to defend itself. I don't think he's necessarily benefiting too much anymore. And outsider looking in, from respectful analysis, it appears as though as long as he removes or maintains away from drafting Muscovites and the people who, let's say, are the main power base of Russia, he can stave off. But it's going to become, or going to get to a point where it's very unsustainable. And at least for the future of Russia, they've castrated themselves as far as like a long-term threat and adversary. I think they've effectively been more or less castrated. So Europe, if they get their game up, like, Europe would be very formidable comparison to Russia. It has, in terms of economic power, vastly overpowers the Russians. It's just like Europe has to wake up and focus, which is what the US has been trying to get the Europeans to do, with varying degrees of success. Okay, just checking. All the men died. Ukraine war, Russia, only 1 to 1.5. Yeah, and then so do that, and then now calculate the men within that age group, the young men. It's like a percentage of the young men, because those are the two you got to calculate. Because right now, it when you take the look at the percent population, it's like, oh yeah, it's not that bad. Then do the percentage of the young men. Russia also has an aging population as well, and it could go on for even longer. So quickly, that 1.5, 1 to 1.5 becomes 2 of the total men population, and then can quickly expand beyond that, depending on how much it grinds. And the casualty rate, I think, has been accelerating more recently. I could be wrong there. Don't you think they're kind of putting nail in their coffin for themselves in general trade relations, killing their productive capabilities via deaths and fueling the war with capital constantly? Yeah, no. Like, economically, like, I'm not a believer in the whole war economy myth. I think that's all bullshit. Yeah, you're just basically producing things to destroy them. So I'm just here and I'm making conclusions, by the way. Yeah. Yeah. Because lifestyle. Yeah. No. Like, demographically, Russia was already kind of fucked. They just got more fucked. So, anyways, we're gonna get to the starred questions now. So, what do I think about UMG? Universal Music Group. I like it. I actually don't know what the price is at recently. Let me see with the new announcement. Okay, it's still like wrecked. Yeah, I mean, oh shit, I didn't even realize it got this cheap. Wow, it got really wrecked, and it's only just kind of recovering now. Yeah, so Bill Ackman trying to acquire the whole thing, I guess, makes sense. I would look into the terms. If it's all cash, yeah, buy it. I think you could definitely do it. Okay, so what are Cordo? There are better places to put. No, yeah. So actually, both of these are pretty strong. I think these AOI, TSM, memory, etc., all of them still structurally long. Do you think there's any private loan risk? What was this in reference to? Was it private credit? Or was it something else? Milkshake store. What was that referring to? Was it better price, Dave, or Affirm? Dave is cheaper in the now. Affirm, they're different products. They're different companies, both fintechs. Affirm is really cheap. Dave is also really, really, really cheap. But better price right now, probably Dave. What's your outlook at Microsoft? Bullish, bearish, OpenAI, IPO on the horizon. Structurally bullish, Microsoft, not bearish. I think recent bearish narrative on OpenAI was like they weren't going to be able to raise capital. They raised capital. Market's going to move on to something else to be bearish about. The flow argument on like what OpenAI, Anthropic, SpaceX will all do is interesting, but I think the market will accommodate it in due time. It's not a big deal for me. What do you speak of Viva and why it's dying? All software is dying today. Anthropic released new product and it's killing them. Can you talk in details on PFFA, why you like it for a preferred income portfolio? So the preferred income ETFs that exist out there, especially the market cap weighted ones, they're all dumb. You don't market cap weight preferred income stocks or preferred stocks. They're debt instruments. So typically for products like that, it's not necessarily a bad thing to have active management. They employ a little bit of leverage, and there's some churning you want to do in that kind of portfolio. So yeah, active management is good. I already shared my thoughts on Axon. Your thoughts on REITs, specifically apartment REITs like CPT. So all REITs valuation is going to be dependent highly on where longer term interest rates are at. Wherever you think long-term interest rates are going to go, if they're going to go down, the valuations are going to go up. That's the first thing. But yeah, generally speaking, both of those great management teams. I probably prefer. I'm surprised you didn't do ESS either. That's the California focused one. But yeah, both MAA and CPT should be fine. CPT is selling SoCal. Oh, wow. Yeah. Well, okay. That makes sense. So transaction is going to sell the real estate. Yeah. I mean, unfortunately, that's the thing with like REITs. They can't retain any capital. So the buybacks are a little bit constrained. The Canadian company, Equity Lifestyle Properties, like that one's actually not Equity Lifestyle. Is it Equity Lifestyle? I think it is Equity Lifestyle. So Equity Lifestyle Properties is the only one that I found that's like a C corp. Retains all its capital, etc. Thoughts on Crocs? Revenue margins declining but cheap if it can get back to steady growth. Yeah. Well, Crocs in general, cheap. A lot of the retailers are cheap. So Crocs, it's recovered all the way back to 97. I mean, the buybacks can be very menacing to shares in a good way, not in a bad way. So, I mean, their story is really simple. Their core brand still decently strong on a relative basis. And, just printing all this cash, don't know what to do with it. Just buy back tons of stock. Nothing else to it. I don't hate it. It's just next to these other names, kind of hard to buy it. Love them both. Not the cheapest stocks out there, but amazing, excellent quality. Thoughts on Carrier? I like it. Not like sounding like, oh my gosh. Well, it's at 58 actually. You could probably do good. So between Carrier, AON, Train. Yeah, the one that's like the best one of them all, which isn't in charge of the actual construction, but the implementation, etc. Is Comfort Systems. They're probably the best. All right, so coming back. Are you long Toast? Yes. Yes. Is Netflix overvalued at this price? Oh, what is Toast even at? Is Toast? I haven't checked Toast's price today. Yeah, 26. I mean, this is crazy. Is Netflix overvalued? No, I think it's fair value. It's a hold. I was accumulating when there was the whole scare with Warner Bros. Like for the first time in a long time, getting some accumulation there. But yeah, where the hell is Kiwi Sam? He's in Australia. Is it time? Oh yeah, I think it's been time. But yeah, Turning Point Brands is pretty cheap. Yeah, I kind of view it as an execution. Neither it does really good, really bad. Well, right now you don't need actually it to execute that much on the pouch business. That's how cheap it is. Also, yeah, I talked about Axon earlier, but Axon I mean, valuation compression is a hell of a drug, man. What can I say? So, yeah, trading at really expensive multiples, that can always just bounce around. So yesterday was down. Small portion of your portfolio. They do not have that much control over their destiny. They are still subject to Dell, and you have other players that are much more monopolistic in the space, that their moats are insurmountable. TSM, all the equipment codes, etc. So just keep that in mind. I wouldn't dig up TSSI to make it like a core position. Be careful with that. JEPI, PFFA for an income portfolio? No. So great, you're asking me this. So I generally don't view any product with the mechanism of a covered call as inducive to something that's like what you're trying to do is achieve a goal of like fixed income. I think if you're trying to go with fixed income, something that is approaching fixed income strat, like a PFFA, which will give you a little bit more yield, CEFS, which is a little bit different. They focus on CEFs and more of an active strategy approach, try to unlock the value there. So those are going to be a bit more unique. You can even go for some, BDCs if you're feeling a little risque, because right now BDCs are really cheap given what's going on with private credit. Not all BDCs are created equal. I'll kind of say the ones that I think are decent. I would focus on high level internally managed BDCs. So things like Main Street, Hercules. But these are going to give you equity exposure as well. So not just fixed income. They have a fixed income credit component, and then they get you a little bit of an equity exposure. That is why Main Street is able to actually do really well and grow the NAV rather than just like paying everything out. So the reason why the share price itself has appreciated over time is that equity component. So they don't just only take on debt risk, they take on some conversion properties in their debt. So they can convert the debt into shares and then participate in upside in the companies they're loaning to. But internally managed BDCs tend to have the best framework of incentives. PFFA, you're getting prefs. You can buy individual prefs. The reason why I don't like covered call ETFs, et cetera, is you're still taking on equity risk without knowing you're taking on equity risk. And if you're trying to get more fixed income, it's not the same equity risk as Main Street and the others, by the way. It's different. But you're still taking on elevated equity risk, or not elevated. It's not like it's levered, but you're also capping the upside, because the whole point of taking on equity risk is the potential upside. So I view them as problematic instruments because there's almost like no reason for them to exist. Genuinely, they're just there to suck up AUM and market themselves in a certain way, get some investors to invest in them. They've been like great instruments to kind of do a long short on the stock, because you can short the depending on the cost to borrow, but you can short the covered call strategy of that same equity and then go long the regular equity. And you'll always create this like outperformance between the two in most circumstances, because there are some circumstances where the covered call one does better, and that's usually like literally in a flat environment. But in an up environment where most of the returns happen, you have the covered call strat lag behind. And it's just a matter of time, really. It's not something like you can't just look at even a 5-year period. Sometimes not a good look. If you look long enough, always it will underperform. And you're going to capture much of the downside too. So I just don't like them. If you're trying to go for fixed income, I would just say go for the fixed income. And there's options out there. Go for prefs if you don't mind some of the illiquidity out there. Be careful with prefs. There's a little bit more due diligence. You can just do PFFA if you want a fund to take care of it. You could again, BDCs is like if you want a little bit more risk on, you could just do straight bonds. If you want to be tax efficient with treasuries, there's BOXX. But yeah, I don't particularly like those. So I think they're not conducive long term. They're great for yields. I'm not yield, fee farming. Have you been able to do your research in your holdings? So tools. I mean, everyone uses AI. We more so for information gathering. I use it for, gathering like gathering the filings and finding pages and annotations. So it'll say like, oh, find me all the instances of where it looks this, and then I'll go to those places and read it myself. Difficult to just only pull the information because you never know what's going to hallucinate, and that's not good practice. Kind of a thought process like, okay, I have a stock I'm interested in. Okay, I gather all the SEC filings of the past, 10 years. I get it to work on going and reading through those SEC filings and finding me all the instances where something is mentioned. I take the transcripts, all in the same thing. Basically, it's as good as what you feed it. And so there's a way to easily grab all of those filings, all those transcripts, throw it in, shift through it, get like highlights, and see where you should kind of start first or poke first to answer these questions that you might have. I don't use it to think for me, to analyze for me, because it's not the best thing. I've done it for fun, and I find it kind of interesting when you try to get it to act like a certain persona. But yeah, it's not. You can tell it's not really thinking per se. These things are not alive, right? It's clear they're not alive. Okay, so FSK is something interesting. Yeah, they just got recently downgraded to junk. So there's a risk there that if you're comfortable with that risk, sure. But I do not like externally managed BDCs for the reason that the incentives just simply aren't aligned. I like to stick to, if you're going for the BDC, I'd go for the internally managed BDCs. I think those are much more aligned with you. So I'll show the names here. So Hercules Capital, this is one that's focused a little bit more on healthcare, et cetera. But at the very least, you're getting a management team that's much more aligned with you than not. Again, most of the return is going to be paid out in the form of a dividend. You get equity-esque exposure. That's a large part of what the outperformance has been from. And then alongside that, the dividends, et cetera. And then Main Street Capital is the other one I like. Internally managed and a little bit more mixture of fixed income versus equity embedded in there. So, but FSK, which I think is the one that's co-run by KKR. Yeah, it is the one. Okay, so these guys like externally managed. I don't think they're necessarily aligned with you, but you could get a really meaningful short-term high rate of return if you're right on the sentiment shift and that the downgrade by the credit agencies was stupid. I haven't done the legwork there. But the market is implying a lot of risk here. So I'd be cautious on it. JK, don't take that advice. When interest rates drop, that's the time for REITs. Buy more small buys, 2 duopolies, SPGI, MCA. Oh. It's funny because I think MasterCard and Visa are going to grow slightly more, and they're trading slightly cheaper. So part of me says them. Have an opportunity for some exposure to Perplexity pre-IPO. What are your thoughts on the second tier AI firms that rely on other models? I mean, they're producing a lot of really cool user products, and in theory, they pass on the cost somewhat. But I don't know, man. I feel like the founder's kind of just like he should have partnered more with someone for the distribution aspect. I don't know how much you would put into it, but it might be worth like a high risk gamble, because that's what you have to consider it as. The other possibility is, all of these things IPO, we have like one hot year, like a 2021, and then all this comes crashing down. You have a major correction, and you'll get all of these companies for much cheaper than the IPO price. I don't know if you can sell immediately on the IPO or not, because if you can, I'd probably do that. or close to that IPO. I highly doubt all these AI stocks are just going to be, whatchamacallit, trading at a great adjusted valuation. Think about Novo here, actually. Fat people want skinny. Yes, I remember the fat people want skinny thesis. Simple, sweet. Wow. Wait, someone asked me about Novo earlier. I had no idea. It's $37. That's crazy. No, I'd have to look more into it. I mean, you're in CM. We can talk about it, Lucas and CM. But other than that, I'll say it's Ted. Yes, well, we can talk about it in CM. So other than that, I'll close it off here, and I'll say thank you guys so much for watching. If you guys enjoyed this live stream, please feel free to like, share, and subscribe. And you can check out in the description below the sponsors for this channel, which is myself, and for if you want to join the Capital Mindset community, and of course finchat.io. So if you use that, you'll support me in some way. Then I'll get a little kickback for a wonderful product. Other than that, I will see you guys next Wednesday on the next live. We'll see what happens with Iran, with all the ceasefire. Maybe tomorrow it ends, tomorrow it doesn't end. We'll see. It's the old saying, may you live in exciting times. And with that,